Welcome with Swiss Trader. Today's topic is low entry by Confluence. We look for very low entries in index markets. This is the same for stock markets. And we look at this picture and we have several points here. The opening of the market is here at 9 o'clock and a very low entry is here about at 10 o'clock. 10 o'clock is in the index markets, it's a typical time where you have a turn of the price, and we will look at the confluences. What do we see here? We have here, there are two hammers. We will look at the bigger picture afterwards. We have a trend channel. This trend channel was drawn in the hourly chart. Here we have the 15-minute chart, and we see we are just below this uptrend channel. We are at the lower bottom of the opening range. Here the orange rectangle is the opening range. It's just the first hourly candle projects it further, and we have here in the stochastic we have a cross and a relative deep value, and we are out of the developing value area. This developing value area, it's this blue line here and here. These blue lines include 70% of the volume of the traded price per volume, and the price is extraordinarily cheap if it is outside. Here it is outside. Here it's extremely expensive because it's outside above. Outside below is extremely cheap. And look at the points here again for recapitulation. So the stochastic oscillate is low and shows a cross. The price is outside the developing value area. Then we have a hammer candlestick, and we have a similar pre-open touch of this low. We don't trade this because it's not the cash market, it's just the future market and option market. And price touches the lower opening range. The lower opening range is most often a very good support, as is the upper opening range is mostly a resistance. And we see here we have a false breakout before, because this resistance is quite big. Yes, the price touches the channel border with this red line. The price is near the SMA 200, the simple moving average 200. This is this blue line here. It depicts the global trend. And yes, and time. We will see afterwards that we have many turning points at 10 o'clock, but it's not. It's a bit of a seasonality. It's not. It does not always be true that it comes. Now we look at this chart of trading view. We see here this strong uptrend. It's clearly defined. Not always, but more or less. We see this uptrend this uptrend channel, and here we have the picture I already showed to you, and now we go to the day before, and we see the pivot point is much lower. That means that this day is much higher than the last day, and there it is a bit heavy to find. It's difficult to find the ideal entry. Here we have this hammer. We are outside the value range. This would be a nice nice entry, and we still have a downtrend here in this uptrend, a subordinated downtrend, but it's far from the SME 200, but the trend line is near the SME 200. Let's look at this situation. Here again, it's about it's already at 9 o'clock. We have this hammer. We are below the opening range, and we are outside the value range. We have these confluences here too. And what is not so good is that we have in trading view, we have only 15-minute charts. 10 minutes would be better. 5 minutes is not so good because we don't see these hammers again. Oh, I just show you what is a hammer. These candlestick patterns, or no, it's not even yes, it's a candlestick pattern. It's no formation, it's just one candlestick. The hammer is near a support, and we have here the hammer depicts a trend change from down to above. Also the inverted hammer, from above it turns, and the other way we have an uptrend and we have this hanging man, and we have afterwards we have a downtrend, or we have this shooting star. It's just a formation which goes very quickly up, and it crashes in itself. And we look for these candles here. We see this pattern very often. Here we have the big hammer. It's a bit late at 11:15, not at 10 o'clock. It need not be 10 o'clock. And we have here some hammers, but a trade here would not have been profitable. That is hard to see. You have to have a stop loss, and this would have run in a stop loss. But here we have a very, very clear hammer. Then if we watch here again we are at the trend line. We are outside the value area. We don't have a clear hammer here. It's rather an inverted hammer here. The wick is above. But we are outside the value range. Again, developing value range. And we have 9 o'clock. Here we have now 10 and 10:30. It's a double button. Here we could have entered, but maybe the stop loss could have triggered here. That's not a simple situation. Yes, we have, unfortunately, we have no downtrends because we just here we have a small downtrend. To find this point is a bit difficult because yes, we have here some shooting star like patterns too, but this one is clearer and it's out of the developing value range. Maybe it's above the SMA 200, and yes, we don't have so much confluences here, and back here the trading wheel doesn't show the volume profile anymore. We can't look here, but here that's a bit unclear. We have here several hammers, and this is short. The timing here is important. It's before the open of the US. It's at 3 o'clock or even 15:30. It goes down. Dow Jones takes it down. So that's the thing that I wanted to show. Maybe we summarize again. Confluence means many indicators at the same time. We look at as much as possible at a big count of indicators to find a low entry. And don't forget, it's hard when this side is not drawn yet to find it down. You just have to spot these developing candles, and as soon as you see that it is a hammer, and the rest of the indicators are in confluence, you have to enter. Well, that was it. See you next at Swiss Traders. Bye.